All right. See, I thought somebody was going to take the intro. Hello, everyone, and welcome to the automation station here with the PeakBot team. Third week in a row with the new intro. Still not used to it. When the show starts, there's a couple things I need to be doing. I'm looking down at my phone. I look silly. Welcome, everybody. Happy Friday. Good to see
Why
everyone.
don't you just ask us how we're doing, and then you can get back to your phone.
Yeah.
Ben, how are you doing?
Wow.
Stressed. I'm always stressed.
Yeah, let's not lie about it, man. Fridays, this doesn't feel like your normal Friday. A lot going on in the world of PeakBot.
Fridays are big trading days. Most
Sure.
people look forward to Fridays. It's not that I don't look forward to Fridays, but I just know Fridays are going to be stressful.
Yeah, always. Got to get your PeakBot picks made. Got to check out everything else. I'll tell you.
Yes.
Yeah, I'll tell you what. I was just backstage still making the final picks. I was stressed looking at charts this week. A lot of movement in the last few days. So we're going to get into that and more. For anybody who's not familiar, PeakBot is an automated trading platform built for the everyday retail trader. We make it easy, affordable, and transparent for the everyday person to put a stock trader in your pocket. We're going to show some live examples of that here in the next few minutes. We got some hands-free trading, trade window. Hey, Doug. Trading window for trend spread and iron condor opens in 4 minutes. So, Ben, you running condors today over the weekend?
I am, and we will see.
We'll see how that goes.
I'm pretty much running my condors on IWM to just see where premium is at currently. So it's more of like a test, and I want to see it in my. I could just look at the logs, but I want to see it in my account. That and XSP, I've been running XSP all week. I haven't done an analysis on it yet, but I think I made money on it. I think XSP lost once this week, which is surprising because we've been going back and forth, whiplashing in this market.
Absolutely. I've been very cautious of the condor. I don't think I ran a single one this week. But excellent. Okay, so we'll have trader trivia. We're giving away free PeakBot subscriptions. All right, hands-free trading access directly connected to Tradier or a couple other brokers, but Tradier's got the best deal for sure when it comes to trading options, specifically the short-term options that PeakBot strategies are trading. So, fellas, where do we want to start? I know we got about another less than 2 minutes until we see probably Ben's condors come through. We will then do trader trivia, I would believe, before we got into PeakBot picks. What are we thinking?
Yeah.
All right.
But yeah.
So I know we're still waiting for a good amount of people to join here. A lot of people join right at that 12 o'clock hour. So I can tell you guys about, maybe the past week for PeakBot picks. If we're going to be spending time on picks for this week, how do we want to do it? Where do we want to prioritize the time there?
Well, we got, what is it? We got a minute until, this is always an awkward period, but we want to be live now. We want to be live for these picks. I'll pull up my account. I'll take a look at my iron condor trades today. I do have an open Google position from my trend spread. I actually turned that off because I'm fairly confident Google will close below 177.50. And I want to collect this full premium, so 71 minus 32. That's $39 in premium that I would have collected this week. I want that full $39. And if Google closes below 177.50 at the end of the day today, I'm going to get that full $39.
Nice trade.
Also, I have my SQQQ wheel trade here. I am going to collect all of this premium, so 49 minus 13, that's $36 in premium on that wheel trade. And that was on a $1.50 spread. So I like that return. That's about a 20% return on capital needed. And that actually is going to factor in to my picks for this week for PeakBot picks. Excited to talk about that because I'm coming at this with a slightly new approach. Don't know how long I'll be taking this approach for, but will be interesting.
Okay.
Anyways, that said, we are at the 12 o'clock mark. You can see my current XSP condor where my call side is closed. My flip side is open. The price of XSP actually just breached the sold contract there. So part of that position is in the money. As you can see, price has been flickering pretty weird this week. And there's my orders, just like
Hands
that.
free.
Hands free, hands up. I didn't have to do anything. I just set up my bot. I could have. I mean, we're
Wow.
running a short right now, and I got those trades placed for me.
Wow.
Yeah.
So
IWM credit is crazy high.
right, that's what I'm saying. That's why I wanted to see it on my account. I've
Crazy.
never seen credit this large on IWM before.
Never.
So we will
Hasn't
we will
filled.
see we will see if these fill. I based on the price right now, it looks like IWM could fill. When we take a look here, we're selling the 205, buying the 206, we're selling the 200, buying the 199. And if we go take a look at the IWM chart, we are currently trading at 202. So we are right smack in the middle of that 205 and 200 strike. 202.50 would be the exact middle.
That
So-
looks like a pretty good condor.
Yeah, I'm happy with this condor. I want to see it fill. I don't know if XSP is going to fill at 53 cents. Might have to make a manual adjustment, but we have been thinking about making updates to this condor strategy where we would send market orders to open versus a limit because we do want to get filled, especially when IWM is at fit. So actually, let's have a test right now. If we were to send a market order out on this position, I'm going to just change this to a market, right? So we sent the order out at 54 cents. I'm going to switch it to a market order, which is super easy to do on Tradier. Look at that. I filled instantly at 53 cents. So just a penny different, and I got my fill. Whereas if price had moved in the wrong direction, or actually for Condor's price would have had to stagnate where they were, I wouldn't have got that fill today. I might not have been able to place that trade. Now, Monday, we'll see if it was a good trade or not, but you got to be in it to win it, right?
Are you going to see if what you could do the same on XSP?
Sure, we can test that out on XSP. So
You don't have
XSP,
to. Don't feel pressure. I was just
feel
curious.
pressure. No, you're pressuring me. So I can modify this to a market order. And remember, look, so the XSP was placed at 53 cents. If I change to a market order,
Wow.
wait for a second, that filled at 47 cents. So that was a little bit of a bigger difference. That was a 6 penny difference. However,
Still a good
again,
fill.
I'm in that trade. Still a good fill, great fill. Sold the 576 call, sold the 561 put. That's a pretty wide condor. I like that. I like that a lot. And then if we look at where XSP is trading right now, we got to go to trading.
Go to
View.
trading view.
1 penny. I
Where
didn't even know.
is it?
I don't think a stock could trade for 1 penny. Shouldn't, I think that's to legally be off the exchange.
XSP. So what were my strikes again? They were
561 and 576.
561, 576.
Trust
So
me.
looking at XSP, we're at 567 right now.
Oh.
We're skewed towards the call side.
But still wide.
Yeah, it's still wide.
Look at Ben
I got-
all blurry.
I
That's
got
really-
room to move.
Yeah.
I got
All
room
right.
to move.
Hey, that's a little man and machine right there. Bot placed the fill. You were just testing things out. Lost
Yeah.
7 total cents on 2 trades. But man, nice fills. Let's see how those go.
No. Crazy fix for the blur, Ben. Worked instantly.
Yeah, that's
Yeah, that works. Just throw your hand up and bring it back.
You'd think so. By the way, just a quick mention. PickBot members and affiliates, we are not financial advisors. None of this is financial advice. Please consult a financial advisor before making any investment decisions. All right. So where do we want to move? Do we want to get into...
We get into a little bit of trader trivia. Peak bot. Did you know?
Okay, let's do
Up
it.
next.
Let's do it. I got some trades, by the way, on Trend Spread if we want to see them quickly. However,
We'll
they are...
go over our picks.
Yeah, that's a better idea. All right, let's do it.
All right, Trader Trivia. Let's get
I've got it.
music going. Oh, I beat you to it. The
I
question
can
today, and here's how this works for anybody new. We're going to ask a question. You can text us the answer to the phone number on screen, 973-888-1166. If you get the answer correct, we're going to text you back with a link for a free quarter of PeakBot. So if you've been thinking about trying out trading bots, you're not sure if you want to do it, you don't want to really pay for one to try it out, here's your opportunity to try it out for free for 3 months. You're going to get a 3-month subscription to PeakBot Basic, which is an $87 value. This is for new subscribers only. All right, so listen closely. The question is, what is the primary purpose of buying a call option in the stock market? Is it A, to limit potential losses on a stock you own? Is it B, to profit from a stock's price increase? Is it C, to collect dividends from a stock? Or is it D, to secure the right to sell a stock at a specific price? Think about it. A, B, C, or D? Text that answer into 973-888-1166.
Good question.
Please don't call us.
Small font, though. Small font. Real small font.
It is small font, but that's because there's explanation behind the answer, which takes up all that area. So while we're waiting, let's get into a did you know? All right. Did you know that options trading was once illegal in the United States, and it wasn't until 1973 that the SIBO was established and options trading was officially legalized? Before then, it was considered gambling and banned. The SIBO revolutionized the financial world by creating standardized option contracts, allowing the market to open up to more investors and traders. So,
thank you, SIBO.
Wow, I actually didn't know that.
I did fact check this, and this is a GPT fact, and in fact, it is wrong. It wasn't illegal. Options trading wasn't illegal. I wanted to keep it up there though because it's interesting. But SIBO was established at that time, and it was put in place for all of the right reasons. And maybe it was just illegal to trade options via.
Maybe we'll ask GPT what they mean by that, or maybe we won't. But regardless, we know SIBO has had a major role to play in American options. All right, very cool. So again, the question for Trader Trivia for 3 months, okay, of PeakBot's subscription, what is the primary purpose of buying a call option, buying a call in the stock market? Limit potential losses. Here, I'm gonna get rid of our faces. To limit potential losses on a stock you own, to profit from a stock's price increase, to collect dividends from a stock, or to secure the right to sell a stock at a specific price. We're going to give 10 more seconds to keep things rolling here. And we'll go from there.
Sweet.
All right, we're ready.
All right, the answer is B, to profit from a stock's price increase. So a call option gives the buyer of the option the right, but not the obligation, to buy that stock at a specific price. That's known as the strike price. And that has to happen before a certain date. Could happen at expiration, but investors typically buy call options when they believe the price of an underlying is going to go up. So if the price goes up, the buyer can exercise that option, buy the stock at a lower price, sell it at a higher price, make their profit. Or you just cut out all that extra work and just sell the call at a higher value. Or, I like Doug's answer here. Answer E, to hedge a short position.
There you go.
That's true.
A call.
Or it could also be to secure the right to buy a stock at the price.
That's exactly what you said, Thomas.
That's what you said? I didn't hear that.
Yes,
exactly.
That's what the actual answer was. That was answer B.
Oh yeah, it was B, but that was to profit off an increase.
Tom's still sleeping.
All right. PeakBot picks.
No.
Yeah, let's get into it.
Yeah,
Um,
hit us with it, Dylan.
So I'm going to pull up my trades from last week. Okay. Not the best week for me. I'm going to pull up our Peakbot Picks tracker. All right. And we're going to get into it here. So I went 1 for 3. All right. Lost. Still have an open position. Can't technically. Well, I guess that's not true. I got a sign. So 3 losses. I'm sorry. 2. All right, let's talk about my W on Etsy. I had a call credit spread on Etsy. I made $25 on our trend spread bot. Okay. I earned 42 in premium initially. The bot actually took profit. This entered last Friday, took profit automatically on Monday at 60%. Okay. It was a $3 spread. I was trying to stay below $53. So if we take a quick look at Etsy on a chart here. I have Bank of America open, but let's just look at Etsy. Again, I needed to stay under 53, okay? And this was entered on Friday. So if we look back on the 28th here, all right, this is when the trade entered. I needed to stay under 53, which isn't even on the screen right now. Still can't even see it. Here it is. We can see this was well out of the money the entire length of the contract, but I took profit right around here, okay, for $25. W. Okay. I shot myself in the foot on NEE here. I ended up manually trading out today when it went in the money. I took an $18 loss on this trade. Okay. So I earned 20 in premium. I took a $38 debit on it. It was a $2 wide spread. I was trying to stay below 72 on NEE. This thing went absolutely nuclear out of nowhere. So we can see I entered the trade right around here, trading right around $69. My sold call was at 72. We can see it jumped over here on Tuesday, but very quickly came back down. Let me just pull this back up here. So here's what happened today. All right. We were down, down, down. All of a sudden we open up. This thing just starts screaming. Okay. I sold it right around the money, just took my loss. And as we can see, still right now, this would be in the money further. So I trimmed my loss there. It's okay. I wish it didn't happen, but boy, just a wild end of the week there for NEE. And then Walmart. I was actually assigned early on Walmart here. Okay. So my sold strike was 98. Seemed a little high for the fill, to be quite honest with you, based on the time of entry. Absolutely plummeted. So I'm holding these shares at 98 right now. It's trading at 91. I do still have an open put here, my bought put that is making some cash. I will likely exit this before the end of the day today, but I'm just going to keep an eye. This thing has done nothing but fall all morning here. Here's Walmart, the open, and just continuously falling. I needed to stay above 98. As we can see, that wasn't fun for me at all throughout the entire week. So 1 for 3 for me on the week. So gonna be another pretty big unrealized loss here as I'm holding my Walmart shares. That doesn't mean I'm afraid of trading Walmart. I'll continue to do so. And yeah, that's my week.
Nice. So, Dylan, which one did you win on again?
Huh?
Which ticker did you win on again?
I won on Etsy.
Etsy.
And it even so I took profit on it. Didn't realize how early I took profit. We put this in the newsletter. I fat fingered another trade, got on the wrong side. Okay. We won't talk about that. But it also allowed me to get in double dip on the same Etsy trade on Tuesday to Friday. Also profitable. So I double dipped with the same strikes, 2 trades in the course of a week. So there's some glass half full here. But next, somebody beat me, please.
I'll go up next. I'm 3 for 3 last I checked, so I think that's a pretty good beating.
Let's take a look.
All right, screen is shared. So I'm just gonna go over all 3 of them on the chart. So the first one we have is gonna be CVX. bullish play. If you watch my recap, I was in the money almost immediately after entering this trade, selling 152.5. Put on a put side. Hold on, can you guys see all right? Should I zoom in a little bit?
Yeah, you could zoom in a bit.
All right, there we go. So I was at 152.5 pretty recently. I went into the money. Right now we're at 155.91, bouncing up. Pretty confident that this will stay out of the money for the rest of the day as we approach 156. Hopefully it doesn't pop back down, but right now I'm looking good. I got about $22 in premium on this one. Next one is going to be XOM. So I was actually bullish on Chevron, bearish on XOM, and it ended up working out pretty much like an iron condor. Went short and long on oil stocks. Sold 113, and I got about $23 in premium on this one. So sold 113. Saw this top right here. Saw some more kind of resistance right there. So 113 bearish, felt pretty comfortable. Now we did pop back up today, but I think we'll still stay below 113 by the end of the day. No reason it should pop up another $4. The next one is going to be Nike. Again, this one was a bullish one. Sold 77. So right now we are getting really, really close. And I'll put up the 5-day here just to show you guys what happened. So ran up, was great. All of a sudden today we're now popping back down. I did get, I got $31 in premium on this play. So I think we'll still stay above 77. I may just close out of it earlier, maybe around 2-3 o'clock. Wasn't able to take profit on this, unfortunately, just because we did kind of trade so close to it this whole week. I did go in the money at one point, but it really stayed out of once at a 77. I think we'll be good on that one. So far, so good. 3 for 3, 42 cents. This one's my closest one. Should be done.
Much better than Dylan.
Way better than Dylan. Nike's teetering, but
awesome. All right, I will.
Dylan, you're actually muted.
I was muted. That's just a double L. Kick me while I'm down. And I was complimenting you. I was saying well done.
Oh, thank you.
So here are my picks for the last week. I'm assuming I'm going 3 for 3, assuming Google's going to finish out of the money, which I showed before. I feel good about that. Interesting enough, Dylan, I also played NEE, but I won on that trade. I held on through the price spike and let price come
today.
down. Yeah,
you caught that back out of money there for that blip.
I actually closed out of it yesterday for a small $14 profit.
Wow, I suck.
So, yeah, let it ride, right? Let it ride. So Google.
Wait, that was a manual exit though, or no? NEE manual exit, or does that take profit?
No, it was a take profit. Well, it was a take profit, and then I just adjusted the order to get out.
Got it.
Because we were close around the strike price, and I thought this could reverse and wind up biting me. So decided to close out. Let me pull up Google real quick. So for Google, I sold the 177.5 strike and I bought the 180 strike. So I'm just gonna, actually, I also wanted to talk about silver. So let's rewind. Last week, I let my silver position turn into a wheel trade, right? So I let myself get assigned. It was originally trend spread. I let myself get assigned. I did collect $8 on it. I got assigned at $29. Now, this week, while I was holding it, as we can see here, this blue line here is $29. That's the price that I was assigned shares at. This week, the price jumped back up above $29. And I was just holding those shares. I didn't sell a cover call. I just wanted to hold them. I sold my shares at, I think it was 44 cents. So right around this level here, I saw that pop back up. I saw a profit in my account. I said, let's go. Saved my trend spread trade, made more money on the wheel trade. I wound up netting a total of $53. So it looks like I made $45 on the shares there. So turn that L into a W. We won't go back and adjust weekly scores for that, but for my own personal tracking, I did change that to a win because that overall position was a win. Looking at Google, the 177.5 strike is where we're at. So Google L 177.5 is going to be right about here. So I just need Google to stay below that today, and I will take home the dub, make my $39, and I think there's a pretty good chance of that.
I think you're good on that, Ben.
And then City was a weekend trade, actually. So I got into City bearish at the $76 strike, as you can see right here. And we opened up. Was that the strike? Let me check my box real quick. City. Oh, it was a put credit spread. Wow. Okay. So I sold. Yeah, I sold the 76 strike. I needed to stay above it. Good thing that the bot took profit for me. So this is one that I did not intervene in. The bot did take profit for me. I got in on Friday, got out on Monday, I'm assuming near the open, and then just tanked. That would have been a loss. That would have been a loss if trend spread did not get me out of that position. I didn't even realize it got me out of that position until I was looking at my picks this week.
That's what happened to me with Etsy. I was like, did I really get out of this trade already? I got to go enter this again if it didn't fill. Idiot. Nice job, Ben. Okay, cool. So both of you are looking like 3 for 3 right now.
Indeed.
Well, hey, look, this is a team sport. This is a team sport. 7 for 9, 77%. All right, come on.
Somebody had to bring us back to the mean.
Yeah. Well, let's not forget. I won last week. I went 3 for 3 last week. Let's not forget about that. But it's fine.
Right.
All right. Well, I guess what we should do now is quickly pivot into picks for this week. Yeah. I was struggling with this, guys. So let's go around the horn one more time. If we think I'm being long, interrupt me. All right. Let's pull this up. So, as we talked about, I got hurt on Walmart 2 of the last 3 weeks. Really, really bad. Okay. Really bad. And that's my stock. That's the cornerstone to this portfolio. And taking a beating on that's really wrecking everything else that I'm doing well, or not well. But let's just take a look at Walmart right now. If we pulled it up on the Peakbot watch list, I'll just do this very quickly here. When we look at the watch list, we're going to notice, I think, and again, Walmart's not going to enter for me until Monday. So I'm just going to give a very quick estimate. It looks to be grabbing the $88 strike. When I checked 30 minutes ago, it was the $90 strike. So still a lot of movement right now on Walmart. I'll take a closer look at this, but for right now, this is a tentative, well, it's a lock. If that was to change, I would let people know. But right now, liking Walmart, probably paying, I'm going to guess between $25 and $35 in premium. We'll see how the rest of the day goes this week. But I mean, when we look at the chart here, for the whole year, look, this is a very obnoxious drop here, but we are going to be met by what looks to be a little bit of support right around that $89 price point. So again, rough week for Walmart, but when we take a look at the analyst ratings, this is what's keeping me going here. We had 42 analysts here, 32 of them saying strong buy. When we look at the 1-year forecast, not that it's anything more than just a forecast here, but seeing a lot of growth. I do feel strongly about Walmart getting back over that $100 price point in the next, in the next few months here. So I'm happy to hold those shares. It hurts right now, but it's my stock. I don't think it's going anywhere. So that's Walmart for the wheel. Let's talk about ones that I've already entered. Bank of America, I'm bearish on, and I almost said Pepsi. Coca-Cola, I'm bullish on. So here's the entries. Bank of America, $18 in credit premium earned, trying to stay below 42.50. We're going to take a closer look at the charts here. And then a really low fill. I was hoping to make $10 on this Coca-Cola spread, It filled at 7. I'll live with it. I'll make up more trades in my portfolio for the week as opposed to just earning 7. But I'll show you as to why I liked both of these setups. Let's first take a look at Coca-Cola. Right now, again, we are trying to stay under 69. So when I was looking at charts earlier, and that's, let's see here. So over the last month, we're going to move this to 69 here, okay? And I think that's a great fill for me, bullish, all right? So it moved down even $1 lower than I was expecting. So here's the last 3 months of Coca-Cola, okay? Last time we touched $69 was back on the 18th of February. We can see here we started to get kind of some formation right around that 69.50 price point and bouncing back up. Overall, though, for the last month, I feel pretty good about this staying over 69 here. So that's my trade. Very small premium. I'll probably either if it looks good later today or even into the weekend over Monday, I'll probably enter that again on another account. And then I had Bank of America under 42.50. So let's just pull up that chart. I believe I have that marked as well. By the way, none of this is financial advice. But here's the last 3 months on Bank of America. Obviously, a really sharp drop here beginning of March. But when looking at this, I do like trying to stay under 42.50 here, just based on the technicals, based on the I've traded Bank of America a lot recently. Here's the technicals for the week. All right, still pretty bearish. So I like it under 42.5. We'll see how that goes. Here's the last 5 days. We can see it kind of bounced right off of that and a little more consolidation down here around this $40 price point right now. So a lot of time left in these trades, obviously, but those are my picks. Bullish on Walmart on the wheel, bullish on Coca-Cola on trend spread, and bearish on Bank of America. So not risking very much cash there. I anticipate my Walmart position to be probably another $3 or $4 spread, collecting 25 to 35 in premium.
Nice. I like how you're throwing in the wheel to your picks competition every week. It mixes it up a little bit.
Oh, it has to be. I mean, that's our favorite strat, in my opinion. You guys are trading the wheel, or are you not right now?
I look at the wheel on Monday because the wheel will open on Monday. So I'm not going to do that for Peakbot picks because we do our picks on Friday.
Well,
I like getting data as close to entry as I can, as much as it makes sense.
Let me ask you a question then. If I change my mind about Walmart by Monday, which I haven't yet, but if I did, would I be able to slot in another pick or no?
No.
Okay.
That's
It's your lock.
Yeah.
All right. I'm not moving away from Walmart. It's fine. I'm taking it. I'm trading it.
All right, Thomas, do you want to go or do you want me to go?
I'll go. Let me share my screen again. All right. So I got.
Without even seeing your screen, I'm going to say Zoom.
You're right, but I do need to search first. So we got 2 bearish, 1 bullish on the week. Now, I really wanted to go all 3 bearish, but I was sitting there and I was kind of making some picks, making some decisions, and I came across Uber. And I was really thinking market is pretty nuts over tariffs. What isn't going to be nuts over tariffs pretty much is Uber. I feel like they're not going to be moving too much. They really haven't been moving too much. Well, they have been, but all in the right direction, of course, over the past years. But even over the past 3 months, I feel like they've been fairly neutral. Now we're just kind of seeing some dash. So Peakbot sold me a bullish credit spread, sold $72 strike. So we are fairly far away from the money. Also, we're down today. So I do think that this is a pretty good strike. I do see, if anything, we're going to bounce up. 72 is pretty low. It's bounced off 71, 77. So I really don't see a reason why it shouldn't bounce off 72. Fairly neutral. To me, I think it'll be bullish next week. Then after that, we are going bearish again on 2 different oil companies. So we're going to go bearish again on XOM. Reason being, it's up today. And I think 112 could be another point of resistance right there. So as you can see, 113 was a point of support for a really, really long time, just kind of staying within this range. Now we're kind of back to this range, and I do think, again, will be another bearish play. So we're at 112, and I think all of this talk with the tariffs probably is just going to make it drop a little bit lower. So again, I think this one's going to be bearish on the week. After that, we have Occidental Petroleum, so OXY, Warren Buffett's favorite stock. Unfortunately, it's just been bearish. So I have no reason to essentially go long on this. So selling 48, again, I just think it's another level of resistance right there. Even if you zoom out or on a 3-month chart, 48 is, again, just not any sort of specific point, but I do think it will find some resistance there just because it's found some support at around 47.50 in the past and around 48.50. So I think if anywhere, it might just meet in the middle, 48, and kind of stay below there. Hopefully we are up today. So the strike price is a little bit higher than usual. So I kind of like this play overall. And that's about it.
Cool. Very nice. Very nice. Loving these explanations that are going into our picks versus what we used to do is just see what we could grab in 5 minutes. Kind of crazy to think that we did it that way.
Double mute today, not good.
Double mute today.
Yeah, what were we thinking? Doing those paper trade picks?
I was still.
It was fun. We were better.
I was performing pretty well.
Hey, it speaks to it. What does that speak to? That speaks to needing cash to be successful, right? I mean, like generally speaking, we were choosing these super wide spreads on trend spread, paying good premium with high win rates. Great trade setups, high win rate. We saw it, but you need the cash to do it.
Well, you guys were picking the wide spreads. I was picking small spreads, low volatility.
Okay. You're lucky we weren't tracking strike prices because I'd go back and tell you how wild we were.
It wasn't. It was like $3-4 spreads.
All right. You're right. You were always going low premium, high win rate. Ben, did we hit yours for this week or no?
Not yet.
Let's do it.
Okay, so for this week, I've got 3 picks. I've got QCOM, ticker TZA, and ticker UVXY. So these are a bunch of crazy tickers that we haven't normally traded, and I'll explain my reasoning in just a minute. But if we take a look, see what I filled at, and I did update my tracker here for the fill. So Qualcomm, I filled at $58, and that was a $5 wide spread. UVXY, I had a $3 wide spread. I filled at $65. So that's interesting, and this is what I'm going to get into in just a minute. So I earned more premium off of a $3 spread than I did on my QCOM $5 spread. And then ticker TZA, this is a $1.50 spread where I earned 30 cents as well. So
you're adjusting orders, dude.
I'm not adjusting orders, but what I am doing is, let me pull this up. I am filtering the watch list by ROI. Now, like I said, I don't know if I'm going to continue to do this or not, but I'm going to experiment with it for a week or two. And I'm looking now, obviously, when you filter for ROI, you're going to get a bunch of neutral right off the bat, right? Because you're collecting premium on both sides. But UVXY, it is very high risk, yes, but it is an ETF. It's a 3x ETF that's short on the market, which is why I'm bullish on it, because I'm bearish on the market. We'll pull up the chart in a second. But I didn't hate these numbers. Insanely high EV. We've got 28% ROI, 10% buffer.
It's crazy.
And the pop, yes, it's below the 77% that I've been preaching about, but I'm gonna take a chance. And if we go down a little bit further, we'll run into ticker TZA somewhere.
Control F.
Just do this. Here we go. So the budget's a little bit different here. Really great EV still, great ROI, great buffer. This is high risk. So why don't we take a look at how these positions actually look on the chart, and again, my thinking behind them. So start with Qualcomm because that is not an ETF. So Qualcomm, I sold a 165 strike. I'm bearish on it. This blue line is where the strike is when I zoom out. We are overall in some sort of consolidation period, basically since the summer. It is pretty wide in terms of consolidation. Short term, we had a bit of a fallout. We had a dividend last week. We had earnings in early February, so we won't have to worry about earnings right now. I just don't see Qualcomm bouncing back up to 165 over the next week.
Question, Ben. When you look at these charts here, it seems you prefer to look at the dailies. Yeah? Daily bars.
I do prefer to look at the daily bars.
I'll tell you, watching you kind of break that down week to week, it gives a nice mindset. It's like, okay, well, here's how much movement it's had for the last 5 days. Do I really think it's going to get up to that line? Man, I like that trade.
Right. So then look at the 1 week. We've got 12 sell signals, 5 buy, and then 1 month kind of neutral. So maybe expecting somewhat of a rebound, might be influenced by this consolidation right here. But yeah, Dylan, like you said, I'm looking at these daily bars. It's been 2 weeks since we've been at the $165 level. So we will see what happens. So that's position 1, bearish on QCOM. Position 2 is UVXY, which is crazy premium. Ticker UVXY. Again, I'm bullish on this. I don't love where it is on the chart here, right? Because if we're looking at the past days, we have been below $23 and recently, right? So I'm in this position, $23, $20 put, $300 on the lines, earned $65. Again, I'm fine with that risk. If I'm looking at the trend here, it looks like we pop up and then pull back slightly, pop up, pull back slightly. This is is this a 3x one? No, this is just the Ultra VIX short term futures ETF. Mm-hmm. So we will see. I'm probably going to look to take profit as soon as I can on this one. Like if the bot hasn't taken profit on Monday and I've got like 40%, I might manually step in and do that just because this is a very high risk ticker. If we look at the technicals, 1 week, we've got buy signals. 1 month, we've moved to sell. But again, this is a short-term play for me, so I'm looking at the week mainly. I'm risking it this week. I want to see some high premium come into my account. And then finally, I've got ticker TZA. This is, I believe, a 3X.
This was a crazy fill compared to what we saw on the watch list, almost double.
Yeah, it was. But it was a bit of a wider spread. Mm-hmm. So I got 30 cents in premium. It was $1.50 spread. Actually, what did we say? What did we see here? TZA is $1.50. Okay, yeah. So
just a great fill.
Expecting something like that. TZA, $16 premium right now. Yeah, no, great fill. I think I did see a larger premium earlier today, which is why it found its way on my radar. So I sold the 15.50 strike, which that is 50 cents higher than I was looking at earlier. So I will replace that line. I don't love this trade as much, but that's probably why the premium was higher. Yep. So for this trade as well, I'll also be looking to get out on Monday if I've got profit in my account. So looking at the technicals, kind of going to be the same as UVXY. 1 week buy, 1 month sell. Again, short-term play for me. This is bearish on small caps. So it's a 3X ETF that's bearish on small cap stocks, which have been, as we can see, getting crushed lately. So those are my picks.
Awesome. Well, I love this analysis. It's really good breakdown. It shows a lot of things. It shows that losses happen specifically for me on Walmart. It shows that just because you have a loss with the trade that was set up automatically for you doesn't mean that it needs to be a loss. Ben had a really nice pivot on, what was that again, Ben? What stock you pivoted on? Turned it into a win on silver, which was really nice. Yeah, really good round of peak bot picks. So we'll see how you guys finish today. But if you both go 3 for 3, it's going to come down to premium earned on the winning trades, I think. Unless we're going overall.
Premium right now.
I think you do, Ben. I forgot to update mine. I'll update in a minute.
Historically, it would be you, Ben, based on.
Ben, you have significantly higher premium. I think your Google trade alone might be more. I have made 20. I'm up. I have like $70 in premium.
I'm at 76.
Oh, how much did Google pay you?
39.
That's it. I
Yeah.
feel like Google would have had a lot higher premium.
Well, it wasn't a super. I don't think it was a super wide spread
It
compared
was
to
a
what I'm.
$2.50 spread.
Oh, okay.
Yeah.
I was like, Google usually has wide spreads, high premium, but I guess not.
Ben, question, and we can wrap after this too. But when you're looking at the watch list, right? I like that new approach of looking ROI, but I know you're then going to look at the budget. What's the number in your head? Is it over 5? If it's a $5 spread or more, you're going to try to avoid it. Like mentally, I want to know when you're going into that list. Okay, high ROI, good pop. What's your budget threshold?
Yeah, for the high ROI plays, I'll pull up my screen again here. For the high ROI plays, I'm trying to stay below 250, honestly.
Okay.
So let me go ahead and refresh here.
Thomas is tired. We're playing
You
poker
caught me yawning.
with our friends. We're gonna say,
No,
hey,
I know.
Tune in next week to see how well we did in poker tonight for the 3 of us.
I already plan on picking up a coffee right before I come in. All right, get to bed.
All right, so I'm filtering here, and again, I'm not looking to trade a condor, so I'm gonna look. So like right now, UVIX, interesting. I don't like how low the pop is, but interesting. I wouldn't trade it because the budget's at $600.
Okay.
So I'm gonna keep going down the list. Again, avoiding the neutral because I don't want an iron condor. Here's UVXY, 250. Great. Okay, pop. Again, it's not as high as I would normally want to see my pop, but for that EV and for that ROI, I'm gonna risk it. It is high risk, labeled as high risk. And then keep going down. We've got VXX, that's 350, could be a good candidate. High risk as well. I think the best way, in my opinion, to do this might be look for the first low risk non-neutral. So like here, we got SPY, bearish, low risk, 21% ROI. Trade the market. What are we thinking?
If I had the cash to do so, to put $1,300, you know what I mean, like in that account up for the week, I want a wheel SPY. I like that approach, Ben, and it's really interesting. I think that's where people capture the value here. Is the approach to the watch list is everything. The bot's the bot. You're gonna get your fills. You got to know what you're doing. Yeah, love that approach. And when you're seeing that 73.5 or whatever pop, yeah, it's the lowest we're going to see on here is 70. The highest you see normally is maybe 80 something. So like, could be worse. Yeah, I've been sorting mine by the lowest budget, and then I'm kind of reverse engineering what you're doing, Ben. I'm going, I don't want to see anything over like a $3 or $4 spread. And then I'm going and looking at everything else you kind of pointed out from there. Very cool. Thomas, any insight to you on your approach to the watch list?
I like to go for individual plays on each stock. So I don't necessarily have one, but I do like to go for EVs above 4, pops above 72. The ROI doesn't matter to me as much, but I do care a lot about the budget because I think the budget shows the volatility. So relatively smaller budget, you're going to get that lower premium, essentially a little bit of a higher win rate. But I do like to stay 400 or below. If I really like the play, I'll push it to 500. But normally I'm not going above a $500 budget ever.
Yep. Doug, I have a SPY put time spread on. So far, so good. Rooting for you, Doug. Always am.
And this market's just crazy. We're already pumping back up from the lows that we hit.
Yeah, it's
wild.
brutal out there. It's absolutely brutal out there.
I don't even know if there's any way to trade this market. You can't. You have to go quick. It's just quick, sharp moves, and you got to get in and get out.
The only way to trade the market right now, it feels like, is trading the market.
Yeah, you have to trade the market.
If you're doing anything else, it's a risk. You're trading. I mean, we're not investing, right? These are, these are trades. We can argue that my Walmart is more on the wheel is more of an investment. Not a good one lately.
You'll get back.
Exactly.
You'll probably get a pump next week. I think next week stocks are a little oversold right now. I think we're going to get a little bit of a pump next week, but it's just going to be temporary, and we'll probably go back to dumping the week after.
All right, well, we'll see. So just some quick updates and let's wrap. Peakbot, we got some new partners on our link tree that you're going to want to go check out. If you watch this and you're like, hey, I just want to let somebody else handle this who's done well doing so, we got a new partner, Terry's Tips. Check it out. It's on our link tree. Copy trading, okay? Nothing for you to do, no fingers to lift. So check that out. And I think that's it, fellas. I mean, look, we got some new bots that we're working on. Peakbot. I don't know if, Ben, if this is a cool tease or not, but I'm going to tease it. We're working on a daily covered call strategy. We got some other stuff coming on, some really fun stuff in the pipeline for Peakbot. So if you have questions on anything, always feel free to reach out. You can reach us at the chat feature in your account, or you have our email or our phone by now. And if not, message the chat. Anything else, guys?
No, I think that's it.
Let's get out of here. Happy Friday to everyone.
We'll update poker next week.
We'll have an update for poker. Probably give an update for poker behind your back on Monday when we're live.
On Monday. We'll see what happens.
Yeah. So, all right. Well, hey, thank you so much for tuning in. Almost 800 live viewers here today. Everybody, hope you enjoy your weekend. Happy trading out there, and we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.